Hello and welcome to this special presentation of the CMT Association. My name is Tyler Wood. I'm the Managing Director, and I'm joined today by Stanley Dash, fellow CMT Charterholder and the Director of the CMT Program. It's currently noon Eastern Time on Wednesday, March 22nd, and I promise we will let you all go long before Chairman Powell starts giving his remarks. And what an exciting day it is for all of us in the markets. But for the next hour, I would like you to put down your trading discipline, put down any market anxiety, because we're talking to you about career development, something evergreen, something lifelong and lasting, not the day-to-day ticks of the markets. What we're here to talk about is the CMT program and the organization that has been advancing the discipline of technical analysis for 50 years. I know deep time is hard to comprehend, but that's what our founders began in the late 1960s here on Wall Street. And what we have been committed to is helping investors improve their decision making and also opening career opportunities for our membership, for our charter holders. And those are two powerful goals or missions of this organization. We do that through ethics, through education, through our credentialing program that we're going to talk about today, but also through the professional network. There may be some of you watching this webinar who were gifted, who have the certain genius that doesn't require any network or peer group to help you through your career. Maybe you have that special talent, but for the rest of us, for normal people, when we are going into this industry that is very competitive, that is very crowded, having a group of peers, folks who will share openly about what they are working on, what's worked and what hasn't worked, helping support one another in advancing this discipline and advancing individuals' careers, that is a very powerful piece of what the CMT Association does. So a quick review or a little background for those of you who don't know much about the CMT Association. 2023 marks 50 years since our official incorporation as a nonprofit in New York City in 1973. We now have over 55,000 participants in our educational activities. We deliver a ton of member services in terms of continuing education, conferences, seminars, local chapter meetings. And so that small core group, what they were battling in the late 1960s was a lot of misunderstanding about what technical analysis can do for investors. There were a lot of myths that need to be busted, and we needed to stand up and recognize the professionalism of what these men and women of Wall Street had done before us. So from Wall Street to Dalal Street to Bay Street and every other financial center around the world, we have members who are helping us advance this discipline. I did include a quick slide of some of the history. This year, marking the 50th anniversary, we have embarked on some very ambitious endeavors, including a full-length 300-page hardbound book on the history of financial markets and this association. But I wanted to point out that we're pretty young in this space. If you've heard of the CFA designation or CFA Institute, they're about 30 years our predecessor. And the first idea for creating a credential came up at board of directors meetings in the 1980s. And the first credentials, the CMT charters, were delivered in 1989 to the first class of charter holders, including folks like John Bollinger, Ralph Acampora, Phil Roth, and many other names that are familiar. We have grown tremendously on an international scale over the last 20 years specifically, but since we gained recognition from FINRA. December 17th, 2004, our board of directors went to bat on behalf of all charter holders to gain recognition from the federal regulators here in the United States that CMT charter holders now qualify for an exemption on the Series 86 exam for registered research analysts. But that work has continued, that advocacy, both with employers and with regulators, whether we're talking about IROC in Canada, APIMEC in Brazil, SEBI in India, and the list goes on and on. And for financial advisors and for traders and for research analysts and for portfolio managers, the diverse group of CMT charter holders in our network extends to lots of different job roles. We're technicians. We love charts. What I like is a ascending triangle breaking out, showing that the trend is resuming momentum in the upward direction. And that is exactly what we see in terms of candidate enrollment and expansion of the program. There are over 10,000 folks who are enrolled in the CMT program at various levels of the exam. So if you're just thinking about the skills and toolkit that you would need to navigate volatile markets and improve service to both your firm and to your clients, we're going to talk about a lot of how those tools can be applied today. But from a career perspective, being a part of a very small group of charter holders that can really distinguish you in a competitive job market was really one of the reasons that I enrolled in the program and earned my CMT charter just last year. For more on how CMT charter holders use these tools, how technical analysis has helped them navigate troubling times, trend inflections, regime shift, we did restart the CMT's official podcast, where David Lundgren and I get to interview really deep dive talks with money managers, research analysts, institutional traders about how they employ these tools and what it has meant in their career. So I encourage you to check that out. That's free and playing on every service that you can find podcasts in the world. But you can also come right to our website, CMTAssociation.org. You'll see all 3 seasons in there, with very notable names from our organization and from the industry who have a lot to share about how this works in practice. All right, that's enough of an introduction. Here's what we are going to do today. There are only 3 things that you're going to take away. 1, we have to define technical analysis. For a lot of folks in the industry, there are still misconceptions about what this toolkit can do, what it should be used for, and how it should be used responsibly. So we're going to do that. Then we're going to talk about tools for decision making. Stan's going to talk about just a few examples of how a technical analysis toolkit can help you improve your investment decision making and some of the content that you would expect to see in the CMT curriculum and on the CMT exams. And finally, we'll conclude and talk a little bit more about the program logistics and hopefully encourage all of you to join us in June for this next exam cycle. And so with that, I would like to introduce you to Stanley Dash. I've known Stan for many years, over a decade, as a supporter of CMT Association events during his time at TradeStation. I've known him as a volunteer. I've known him as the recipient of the Service Award from the CMT Association, which we were able to present to him in 2016, but also now as a colleague and a friend and an incredible director to this very prestigious program. So Stan, thank you very much for joining us today, for being here.
Tyler, thank you very much for the nice introduction, and thank you all for joining us today.
Absolutely. I'm going to switch the controls over to you, Stan, so that you can walk us through a few slides. Perhaps we'll even go through a few charts today. How about that for a technical analysis information session?
Now you're talking my language.
Yeah.
Okay. Tyler introduced me. Let's get on to the point. All of you are here because you're considering a credential in technical analysis. You're considering upgrading your knowledge in that area and having a credential to show for it. One thing that's important in any program like that, in any program like ours, and in ours, is to have the same nomenclature. So I want to start off with defining technical analysis. I want to define a few other terms. And then as Tyler said, I want to go through 3 aspects of technical analysis with a few examples that are covered in our material, that are in our exams, and that are foundational to the practice of technical analysis. So first, what is technical analysis? I put a few definitions together just so we have the same, as I said, working nomenclature, the same working language. The study of price action and market statistics, volume, to infer price trends and manage risk. We're looking at the action of the marketplace. That is what our primary concern is. The action of the marketplace, the statistics within the market. I wrote, for example, volume. With futures, it could be open interest. In some cases, it's related derivative statistics like put-call ratios. But these are the essential things we're looking at, is what's going on in the marketplace to give us a hint as where is the flow of capital, where is the interest, what is the trend. And here are a few other definitions of technical analysis I put up here. They're pretty analogous to each other. They're really equivalent, but sometimes a certain set of words hits your ear a little differently than another set of words. Systematic evaluation of price and volume for the purpose of forecasting. The study of the action of the market itself, price, volume, time. A technician often asks, what is happening instead of why? I need to know what the trend is. I need to some way of evaluating how can I participate? When do I know that I'm right? When do I know that I'm wrong? Instead of why is something happening? We always look for reasons after the fact. For that, you can turn on the TV. And supply and demand for shares or contracts. And I want to expand on that one just a little bit and show you a pretty little graphic made by one of our founding fathers, Ralph Alcampora. We said the supply and demand for shares or contracts. We very much look at this. We're used to looking at the value of a company. We're looking to see what are the new products, how is sales going, what does the supply chain look like, what are any regulatory developments. Those we're quite used to looking at, and those are all the company. But as a technician, we're looking at the stock. We're looking at the stock as distinct from the company. We don't live in a vacuum, but I do want to be a little bit, I guess, discreet about it, since that is really what we're about in technical analysis. So the stock, excuse me, is about, we're looking at the price. What's the action in the market? What's the psychology of the participants in the market? Supply and demand for the stock. The volume is a tip-off. I mentioned open interest in relation to futures. We often hear of a story of wow, this great new product. Wow, they got regulatory approval or some new contract for supply, for raw materials or for sales. And then we don't see that same action in the stock. We're about looking at the action in the stock. We're about looking at what is happening in the marketplace that is telling us where capital is flowing and what is the trend for the stock. We've all seen a difference between what we expect from the news, the company, versus what is happening with the stock. As technicians, we're in the bottom half of this circle. So technical analysis uses one feature, one task, one aspect of technical analysis is organizing all that data. We talk a lot about charts, bar charts, line charts, candlestick charts, point and figure charts, and others. That's a matter of organizing this time series data that comes at us from the market. In technical analysis, you'll hear about price patterns. Why do these patterns seem to repeat when we look at charts? What is the reliability? Now, some people are skeptical about those, and that's fine. You should be skeptical about any methodology before you adopt it or incorporate it into your work. But these price patterns are also a reflection of the behavioral aspects of markets. Why do we get triangles? Why do we get flags? Why do we seem to have wedges and different patterns in the charts? It's because it's still human beings involved in the marketplace. It's still our fear and greed. It's still our expectations. And we often see those repeated in the price patterns. Other things we're talking about related to technical analysis is something called Dow theory. Charles Dow and the people who worked with him 100 plus years ago put together ideas about charts and about markets and about different sectors in markets and how they relate to the economy. And a lot of that Dow theory, while it is older, we're many generations past that. A lot of it is still foundational to how we look at a trend and the broad interaction of markets. And then some other things we look at with technical analysis are indicators, and these are probably something maybe you're a little more familiar with. When I use the word indicators, I'm talking about calculations, indicators, values that are derived from price and volume. So these could be moving averages, relative strength index, momentum, stochastics, ADX. All of these are indicators derived from price and volume. The whole purpose of that, and I'm going to allude to that again in just a minute, the purpose of having these indicators derived from price and volume is that price and volume are very noisy. And our indicators, if they're of any use to us, our indicators should help us see the signal through the noise. Our indicators should help us see what's happening beyond the chatter of the marketplace. Now, I want to define two other terms that are related and that are often bandied about And I want to define them so that you can hear them, put them in their proper place, even though, and they're in much of our material, but I don't want them to be confused with core technical analysis. One is quantitative analysis. I used to make this sort of glib statement that quantitative analysis is what happened when they gave technicians computers. And I'm old enough to remember when that happened. Before then, we were technicians, and then they gave us computers, and all of a sudden we were all quants. So quantitative analysis, much quantitative analysis is and can be built off traditional technical analysis. Okay, we may not be using head and shoulders and a triangle in the same way, though you could, but we might be using certain tools such as moving averages in ADX, RSI, momentum, stochastics, and creating mathematical rules and tests using that technical analysis. Using complex mathematical and statistical modeling, measurement, and research, assigning a numerical value to variables to replicate reality mathematically. So I look at quantitative analysis, and this is my perspective. I know it's not complete, and I'm certainly not putting down the work of other quantitative methods. But I look at quantitative analysis as an extension of technical analysis now that we can manage and collect and manipulate so much data. Excuse me. An algorithm, a step-by-step procedure to solve logical and mathematical problems. Algorithm and algos are a great buzzword. You'll hear them all the time, but what are they? The simple definition that I have up there, I think, is the best guide. Step-by-step procedure to solve logical and mathematical problems. How does it apply to what we do? Well, I see, and I've seen this in my work prior to joining the CMT Association, I see two areas of algorithms related to trading. One is what I call algorithmic decision-making, a trading system. Decision-making meaning making the decision to be long or short or out of the market altogether. So that's algorithmic. It's systems trading. It's not just systems trading, but it's systems trading. And this is a good part of the material that we do cover in the CMT program. That's what I consider algorithmic decision-making. Another part of algorithms in trading is algorithmic order placement and order management. And what that means is some methodology for managing orders, usually large orders, using an algorithm. Many of you may have heard of the VWAP, volume weighted average price, or a time slice, or deciding that on a trading desk that we're going to accumulate 200,000 shares, and we're going to do it by buying a certain portion every time we get 3 consecutive downticks. Excuse me. That, of course, is algorithmic order placement and management. We don't do too much with that in the program. It's important. It's part of trading. It's not necessarily technical. We will discuss it as it relates to VWAP, which I just alluded to, because VWAP is a technical indicator. It's an indicator drawn from time and price. So I went through this little bit of extended definitions of technical analysis, quantitative analysis, algorithmic trading, because the words are thrown about. There's an old expression that if you use more syllables, you get paid more. That's not true. But I wanted to put them in their place because there are relationships in there. Now, the CMT program is about technical analysis, and we touch into quantitative work, and we delve into algorithmic work because they are extensions of our technical analysis. So I just wanted to put that into perspective. So thank you for bearing with me on that. Let's get into specifically the heart of technical analysis that we want to talk about today. So I picked 3 topics in technical analysis. They're covered to a good extent in our material, and they are foundational to the work of technical analysis that I wanted to discuss with you. And I have a few charts to show you, of course, as Tyler said. One is relative strength. I'll define these in a moment, of course. The other is breadth. And the third is something called divergence, which is going to touch back on those first 2 again anyway. So let's first talk a little bit about relative strength. So here's a definition from Martin Pring, a noted technical analyst. Technical concept that measures the relationship between 2 securities, the relative strength of one security versus another. one security is divided by another, that's a relative strength ratio. It's strictly a ratio. I'm going to show it to you in just a minute. Relative strength can be used to better understand an intermarket relationship. Well, I see two indexes. Which one is stronger? I see two stocks. Which one is stronger? I see a stock that's in a sector. Is that stock stronger or weaker than the rest of its sector? That's the whole concept of relative strength, is understanding the strength or relative strength or weakness of something as compared to something else. Its sector, its country, its index, its competitors. And Martin Pring's definition, I think, is very concise on that score. Remember what we said here, one security divided by another, a common relative strength ratio. So this was a nice, timely chart that I threw together. So what you see on top, these are both ETFs. I'll describe them quickly if you don't see the labels. This is a regional bank index. A regional bank index, yes. And this is XLF, the financial index of the S&P, XLF. Regional banks, broad financial index, ETF. Okay, it shouldn't take much thought or observation to say, gee, the regional banks have been pretty weak compared to the rest of the financial sector, which suffered also. And it hasn't just been regional banks, but we know the tipping point with SVP and Signature was right here in regionals. So we're just looking at these two charts together, and we can see, certainly, as I said, this certainly looks, just eyeballing it, this certainly looks weaker than this. Well, let's go a step further. And we have the spread ratio that Martin wrote about. We divided one by the other. So we simply divide the regional bank index by the S&P financial sector. When this is rising, just to orient you, when this is rising, the denominator is stronger than the numerator is stronger than the denominator when this is rising. We don't even use scale. We're just looking at, gee, what's the direction? So this is telling us the numerator, which is regionals, was stronger than the financials throughout this whole period, April of 22 through the fall of last year. But we're looking at the breakdown recently with the big headlines about the banks, and we said, well, of course, the regionals are weaker now, but the strength of the regionals, actually compared to the sector, actually peaked last fall. And from this point last fall, the regionals have been far weaker than the whole sector. If you were allocating money, this was a real tip-off. Maybe you would have sold some, maybe not any, maybe you would have reweighted, but on a relative strength basis, this was a big tip-off. I want to show you one more. I'm going to show you the same chart, but with a conventional piece of technical analysis on it. So now I added a moving average of the relative strength line to the relative strength line. So this black line is a moving average. Now, if you're curious, this is all daily data, and this is a 126-day moving average. 126 days is half a year. So you can see that this peak, we also had the moving average broken quite decisively. This was back in this time period. This was way before we were looking at headlines on Silicon Valley Bank and Signature Bank and then other concerns that came up. So really, this relative strength tipped us very early about the regional banking sector within the context of the financial sector at large. I want to show you one more relative strength chart. I'm not going to spend too much time on it, but I want you to see it because it's quite interesting. This was developed, one of the challenges, let me back up one second. One of the challenges in this kind of relative strength analysis is that I can only compare, feasibly, I can only compare two symbols, a stock and its index, two stocks, two indexes. But sometimes I want to compare more. And one of the things that I want to be able to look at is, the ratio of one index to the other like in this chart, the ratio doesn't mean that much. It's the direction of the ratio. In fact, notice that I didn't even put in any scale for the ratio, because the number, if I said, well, it's at 50 or 40 or 80, doesn't mean much except if I know what it was yesterday and the day before and the day after. And where is it going and how fast is it going there? So that concept of comparing multiple symbols, the momentum of the relative strength, the direction in which it's moving, is something that comes into play in what's called a relative rotation graph. RRG, relative rotation graph. I probably should put that on here. This is just a sample from one charting service from Optuma, which is an excellent charting service, of a relatively new kind of graph. I think I first saw these 10 or 12 years ago, which in technical analysis is relatively new. But this is meant for exactly what I was saying, is I can see multiple symbols. I can see whether they are not just stronger or weaker than something else, but are they stronger than something else and continuing to gain strength, or stronger than something else and losing strength? You know, when your sports team is leading late in the game, but the lead is shrinking, they're still leading, but not by as much. And you're getting a little nervous late in a sporting event. And that's the kind of thing that the relative rotation graph addresses. We cover this in our discussion of relative strength, and we have a couple of excellent chapters by the creator of this new style of charting. It was probably one of the most interesting new developments in technical analysis and relative strength in many years. Now let's get on to the subject of breadth. We looked at relative strength. Let's look at breadth. And I will first give you a definition, as I did before with relative strength. Breadth measures the imbalance between advancing and declining stocks. A net increase in the, you know what? That's much too pedagogical. Let me describe it. Breadth is specifically something we would discuss in relation to a stock index. A country index, could be a sector index, things like that. Every given day, I look at the market and I see what the S&P 500 does. But how many of the stocks participated in that? How many of the 500 participated in that? Well, the S&P 500 was up 1.5% today. Okay, it's valid. How many of the stocks were up? And how many were down? Well, it was up 1.5%, but only 150 of the stocks were up. That means the advance was not very broad. The breadth was weak. And that's what breadth is meant to address, is this idea that an index is a composite. And as a composite, we need to know more about what's going on inside. Breadth measures the imbalance between advancing and declining stocks. A net increase in the index, meaning like the S&P 500, the Russell 2000, any index in any country or market, a net increase in that index, while more issues are declining, should generate concern that the upwards move is poorly supported. And that's exactly what I was alluding to. If we have a strong increase in the S&P, but we only have a relatively small number of the 500 shares advancing, it makes us question that advance. It doesn't say it doesn't count, but it makes us question the quality of that advance. There's an old expression for after hours amongst technicians. Is it a stock market or a market of stocks? And that's the idea of, well, the S&P 500, but that's just a construct. That's just an index constructed from 500 stocks. And I really want to know what's going on in that market of stocks. So here's an example. Here's a weekly chart. The blue is a weekly chart of the NASDAQ composite. I'm just using a bar chart. It's not a candlestick for no great reason other than that's what I clicked on. And we see below it, we see the advanced decline line. Now I'll describe what the advanced decline line is. Tyler pointed out that I forgot to put a label on there, but don't worry about it. We're going to look at this chart at least one more time in my little talk here. The advanced decline line on any given day, it's a NASDAQ composite, The advanced decline is the net advancers versus decliners. Okay. I accumulate that number day after day. That's an advanced decline line. This is not smooth, not adjusted. We could run moving averages on this, but you don't see those here. Now, when I see the market rising, this is coming right out of, this is a weekly chart. This is coming right out of the pandemic low in 2020, early 2020. And we see a low made here, a bottoming action. In fact, if you're insightful, you see a head and shoulders down here. And we see this begin to rise. It took a little time to gather, but if we, whoops, I apologize. Took a little time to gather, but as we began to, we may have been saying, wow, that's a heck of a rally. I wonder if this is really going to stick. You know what happened? Advanced decline broke out again, telling us, hey, wait a second, there's a lot of participation here. There's a lot behind this market, and they still have room to go. And then as the market peaked, well, as the market sold off, the advanced decline line fell. Pretty basic, easy interpretation. I'm going to show you another view on this in just a moment. What is often most interesting in these are the anomalous cases. They can confirm, but they also sometimes present us with anomalies that give us warning signs, and we'll talk about that in just a minute. But I wanted to mention the concept of breadth in particular, because some of what we do is very much on the individual issue, individual market level. We'll look at gold. We'll look at particular stocks, whether it's in the US, whether we're looking at Amazon or Tesla or anything else. We'll look at different countries. When we start to look at different countries and sectors, we start to get involved in indexes. And as soon as we're getting into something that's a composite of other issues, breadth becomes relevant. Back when I was focused mostly on agricultural futures and metals futures, breadth wasn't something I looked at all, because it doesn't exist in those marketplaces. But then as I started to get involved again in index futures and stocks and indexes, certainly began to look at it much more carefully. The simple advanced decline line, it's a cumulative advanced decline line that you see in the chart. Not smooth. Smooth would probably be beneficial, but that is not smooth. Now, the third topic I said we'd pull up is divergence analysis. This is an interesting idea. I mentioned earlier that indicators, technical indicators, the traditional definition of something calculated from price and volume, technical indicators are meant to help us separate noise and signal. The marketplace is noisy. There's a lot going on out there. And if our indicators are of any value, they're helping us to see through that noise to what's significant, to the signal. That's what indicators are for. So I have them here, calculations made from price, volume, breadth, even breadth, used to identify important market action to separate signal from noise. So in that case, on that basis, then an indicator should help us identify price direction, should help us see away from the noise. So the analyst is asking, technician's asking, does this indicator confirm the price action? Price action is noisy. It looks upward, but there's a lot of noise in there. What does the indicator say? Does the indicator confirm that or not? Some of this concept of confirmation of divergence dates back to Dow theory in a slightly different context. We talk about that a lot in our book, but let's stay on the moment on indicator divergence. So here's an example. What you see on top is a bar chart of GLD representing gold. It's a gold ETF. So instead of putting up the gold futures or a chart of any other gold data, I'm using GLD as our proxy for gold prices. And on the bottom, you see a momentum oscillator. Now, for those of you who are curious, this is not critical. For those of you who are curious, that oscillator on the bottom is RSI, relative strength index, not relative strength. I don't say that I hesitate to say it because I don't want it to be confusing, but some of you may be more familiar with this than others. For our purposes, that oscillator along the bottom represents momentum. It's meant to tell us, it's meant to help us see upward and downward momentum and extremes that we might miss just looking at price, meant to see past the noise. Now, divergence, I marked 3 places where there's divergence. So here is gold coming up in the middle of summer of 22, last summer. And you see we got new highs a number of days in a row, and 5 days out of 7 or 8 in there. We kept getting new highs in price and a new high close in price, right where my cursor is, if you can see it. But what was going on with this oscillator? This oscillator could not close higher. It was showing lower closes, lower values. The indicator was not confirming price. As I said, indicator based on price and time, try to cut through the noise to the signal, and the indicator should confirm the price action. In this case, the indicator is diverging from the price action. Lo and behold, that was the peak in gold as we went into that slide last summer. Now, this is not necessarily a signal all in itself. I don't want you to be carried away by any one thing that we talk about. We always want to see it in the context. What other tools might you be using? What other indicators of trend? What other volatility or momentum measures you might be using? So I'm not trying to pin a medal on this alone, but I am trying to point out that this was a divergence where your indicator correctly said, this is not really following through. Here's another example, and this was the big low we made, last fall in gold. Here we had this bottom, maybe you want to call it a triple bottom, it doesn't really matter. But clearly from this first low, clearly we had rising momentum on each of the significant lows that followed. And it began the major move that we had right up until a month or so ago, or a month and a half ago. This price action lower, indicator not confirming the price action. And the last one I'll point out was just last month, I guess, or late January into February. We had these highs, and we were just not getting any more action out of this. Now, if you look at the chart, you'll probably see places where there are divergences that didn't react classically the way I'm describing those 3. And you may see others that did. You may see confirming points. I point out these 3 as academic examples, as textbook examples, but I also suggest that these should be seen in context with whatever tools you're using. These should be seen in context with what is your trend measure, what is your risk analysis, where do you see us in support and resistance. Those are very important. You'll see that these highs here did come at a resistance area. That's the whole concept of divergence analysis. And I want to show you one more example. Now, this was the same chart we looked at before with the NASDAQ, the weekly NASDAQ composite, and the breadth that we looked at. And I wanted to show you this because it was a very good example of divergence, and it's the one we just looked at. In fact, here's what we looked at earlier, just to remind you. So we were looking at the concept of breadth, and I was talking about how it confirmed certain turns in the market. And even when it looked like the market might be overextended, breadth gave another push that was a sign that maybe there was still more left in this bull market. So this is the area I want to focus in now, and that I marked on that next chart. So here was, as we reached the top, and this is a weekly, so I'm going back a little further. We're in mid to late 2021 right here, if you're trying to get a perspective. And this line I just drew in to mean we were making higher highs in price or in the index, and yet we could not make new highs in breadth. Breath had absolutely topped out. It looks like a triple top, maybe whatever. And then you'll see that we began to break down here. Now, this red arrow, it's not I marked it carefully when I made the graphic. It may be hard for you to see, but that red arrow is when Breath broke down below that middle low. So this was really the breakdown point. That red arrow comes right where this green arrow is when the market made its highest highs. So the market was still making new highs. And listen, price is important. You don't always run away from price, because price is what's ringing the cash register. But this was a warning sign that, well, is there more left in this? Do I need to reduce my position? Do I need to hedge it a little bit? Do I need maybe to at least back off committing new funds at this point? This green arrow is the highest point the NASDAQ reached exactly when Breath was breaking down beneath that red arrow. And you can see how badly it did, how poorly it did after that. And so somewhere out here, where the market was not breaking down terribly, you were already breaking down very badly in Breath. These are some of the ways we begin to look at, and we just combined two different concepts in here, which is kind of why I like the example. We were looking at what Breath was, just as a numeric calculation, and to understand that it lets us see inside an index. An index may be a market, again, a market, a country, a sector, and see how much participation there is, because the index is a construct of N stocks. But I want to see, I don't want a few particularly strong all weak ones to tell me that this index is really not reflecting what's going on more broadly in that marketplace. And then, of course, we looked at divergence analysis, and we're looking to say, well, if an indicator is any good, if it's helping me see something past the market noise, then when I see market action, it should be confirmed by the indicator. Divergence is when they don't. And as I said, also, when we looked at Breath before, sometimes it's the anomalies that are most interesting points with indicators and price action. Okay. So we talked about a few different things. We talked about relative strength. We talked about Breath. We talked about divergence analysis. We defined technical analysis, quantitative analysis, and algorithmic trading. And I did that to give you sort of the lay of the land. There is tremendous depth on these in technical analysis, and of course in the CMT program. You'll be expected to understand these, and by the time you get to the level 3 exam, you'll be getting charts like this, and you'll have to analyze them just the way we talked about here, with rising and falling Breath and momentum and divergence between the two, and doing relative strength analysis in addition to trend analysis. So we cover quite a bit. If you're inclined to join the program, I'm going to turn it back to Tyler. If you're inclined to get involved, it's very rewarding. You know, Tyler, if you give me one more minute.
Please, by
I
all
want to
means.
mention something. I want to mention something that, you know, I went through my bio was up at the beginning, but that doesn't matter. That's long because I'm old. But one of the things I wanted to mention is that I did start in this business a long time ago doing technical analysis. I was involved on Wall Street and in markets before we had personal computers. I had to keep up by learning programming in DOS. I had to, you know, I had to always hustle, and I mean that in the sense of learning to keep up. Well, later on, I was working for a financial software company, and I had a few. We were doing research reports on new indicators, back testing trading systems, and I had a few people reporting to me who were chartered market technician holders. And I had been close to the association. I had been in New York. I had taught at the New York Institute of Finance, so I knew a number of people who were involved in the association. And I realized that that was the time I should take the challenge. And I was a little further on in my career. I didn't necessarily want to sit for 3 exams. But I realized that if I wanted to confirm all the work I had done and manage people who had this credential, maybe it was time for me to step up to the plate and get the charter myself. So I did. And it was a challenge. I knew quite a bit of the information, but I had to learn some of the details on things that were so second nature that you didn't even think about them anymore, and areas of technical analysis where I really hadn't done much work. But I had to learn all those to round out my knowledge in order to earn the charter. I think for those of you who may be thinking, well, I'm so far along and I think it's still a worthwhile challenge. I think you feel very proud of completing it. And I think it adds evidence to the work you've done. And that's the way I felt. And it earned me credibility with people who reported to me. And it earned me credibility with our clients. So I encourage you not to write it off, even if you feel that you're past it. It's a very rewarding process. It's a challenge. It's not easy. It's very accomplishable, but it is not easy. It is a challenge. And we invite you to join us with it. Tyler.
Very, very well said, Stan. And I'm sure for a lot of folks who are on with us today, they may have felt very rudimentary. Maybe some of those concepts were very familiar to you. But what I take away from the conceptual side of technical analysis is that there are expansive areas for further research. And think about the myriad ways that you could apply that concept in any different trading strategy as a research analyst on a global macro basis or on a futures trading desk. And so hopefully what was covered in this first portion of the presentation today just gives you an understanding of sort of that broad array of knowledge that that is covered in the CMT candidate body of knowledge. But I'm gonna take the wheel for just a second, and we're gonna wrap up this third section, just talking a little bit about why folks would even consider the chartered market technician designation and going through the CMT program. And Stan, I really appreciate your commentary that we actually have a lot of candidates in the program who are veteran money managers, people who have been in the industry for decades. And as we have seen repeatedly in history, when the market regime shifts, there are a lot of portfolio managers who realize they need another set of tools to help them manage risk, to help them find opportunities in a changing market landscape. And so really just thinking about adding more to your toolkit, that chart that Ralph Akampora had delivered at New York Institute of Finance, you know, it's really important to understand the fundamentals. When I went through the MBA program, that's all we talked about was, you know, the management team and allocating resources through the firm and cash flows and return on equity. Those are important data sets. But we as securities traders in public markets, unless you're running a private equity firm and buying the whole company, you're trading the stock, and the stock is different from the company. So hopefully you can see that meshing those two disciplines together, thinking about both the fundamental and technical data, and even quantitative approaches to using a lot of these concepts could be really helpful in your career. All right, so what I want to focus on right now is the CMT program, and a little bit of logistics about what you can expect if you are interested in enrolling. It is a global credential recognized worldwide as the preeminent designation for practitioners of technical analysis. That word technical analysis, or the phrase market timing, has been bantered around Wall Street for decades. And our founders really stood up to clarify what we were talking about. Much of it coming from macroeconomics, a lot of it now being codified by behavioral finance, by cognitive psychologists and behavioral economists. Many Nobel laureates were required to prove out what has worked in practice for hundreds of years to make sure that theory caught up in time. And I say that with great respect to those folks who have given a new set of language to explaining some of the behavior in the markets. It is a 3-level exam. The CMT program requires 3 levels of examination, which you do need to complete in sequence, meaning you finish level 1 before you move on to level 2 to level 3. We test twice a year, once in June and once in December. So for all of you who are tuned in to the webinar today, I'm sure you are already studying or considering sitting for the exams this coming June. And if you are sitting at level 1 and level 2, you have a full week window, June 1st through the 12th to be exact. For all level 3 candidates worldwide, we test on a single day, June 8th. And those exams are constructed, what is most important about the value of this credential is that the exam integrity and security, the fairness of grading, all of that is what Stan and his team at the CTC and many subject matter experts who handle question writing and grading, they ensure that integrity persists. So our exams are offered worldwide through Prometric test centers and also, in the last few years, through remote proctoring, also delivered through Prometric. So there's a lot more information about that. I won't belabor the point. You can head to CMTAssociation.org right after this talk to learn a little bit more about the testing process. But what I think really stands out amongst all the conversations I've had with charter holders over the last 12 years that have worked for the CMT Association is that there is a serious advantage to the deep knowledge and understanding that creates a personal authority. I'm sure many of you, certainly has flown into my social media feeds, TikTok traders and folks who have been maybe giving technical analysis not a great name over the last few years. And I want to encourage you to consider that this field is much broader and much deeper than what any of the free content you can find on YouTube might suggest. So Stan covered just the tip of the iceberg. And as you go through the CMT program, what I found was that there were areas of market research and analytics that I hadn't even been exposed to. Cycles work that was fairly new to me. Concepts from Elliott Wave principles that maybe you don't use in practice every day, but it helps you think differently about your discipline, about how you manage risk, about how you see the behavior of the crowd in markets. So I really want to encourage everybody who's thinking about taking a defined course of study to master these tools, about how that can help your own investment practice, but also about how it helps you stand out in a crowded job market. Todd Salamone, who's the Senior Vice President of Investment Research at Schaefer's, said that the CMT designation is a key differentiator in the industry, and it helped him to stand out in a crowded field. The knowledge he gained from the program has been invaluable in his career as both a trader and a researcher. So simply put, the CMT charter holders are on that leading edge of technical analysis. These are the folks who created the indicators that we all use on platforms worldwide, but are also pushing the envelope, new applications, new ways of expressing an investment thesis in terms of trading technology, research and analytics, and even new data sets. So there's a lot more to cover, and I invite you to join us in this program and in this pursuit of this body of knowledge. I won't spend a whole lot of time on this, but I did want to answer one question that came up in our chat, Stan. Someone was asking about requirements for understanding a programming language. Do you have to know Python to become a CMT charter holder? And I think you touched on it at the beginning of your segment, Stan. And I would just add this, that when our organization was founded, right, it was 200 years after technical analysis had been developed in Osaka, Japan, in the rice pits. Those folks were using pencil on paper to chart by hand, to collate, curate market data, price and volume, to hand calculate indicators, and to do all of this work manually. I know that that's like deep time for anyone born after the year 2000 to even think of doing all of this calculation manually. What we are seeing today is that the requirements for a CMT charter holder is to understand how calculations are made, the logic behind a trading system, signal testing, what's valid, what's not valid, when does it work and when does it not, the composite blend of multiple sources of input. But no, you do not need to learn to code in Python, because next year it'll be R or C++ or you name it. It's not the coding language that is important to us. It is the logic and the statistics and the ability to really understand, get under the hood of what these tools are telling us, how we would use them in application. So hopefully that helps answer that question. If you have been studying, that means you probably have some of these textbooks on your desk. I encourage all of you, if you're even just thinking about the program, the CMT curriculum is a fantastic place to start your study of technical analysis. It is a curriculum that is comprised of many of the authors that you know, the folks who've written the book, so to speak. But Stan and the CTC, beginning in 2015, went through a tremendous exercise of consolidating that curriculum to remove redundancies and any contradictions, to give a defined course of study, a textbook for those in the program. That is published by John Wiley & Sons. It's authored by the CMT Association, and you can pick that up at their site, efficientlearning.com/CMT. Our friends at Wiley asked us to share with you a 30% discount on those textbooks if you would like to begin your study. So that code CMTTW30, CMTTW30 will give you a little discount at Wiley. The other piece of information that I want to share is that on our website, we've listed out participating prep providers. And I went through this program myself. Yes, Even I can pass the CMT exams, so that should give you a leg up and some confidence in your own approach. But what I will tell you is that I sat for these exams in June and December of 2021, and then June of 2022, where I finished the level 3. At each step of the process, I questioned my success in the program. I didn't think I'd had enough time to prepare. Life, both at home and at work, can often distract you from what you had wanted to deliver in terms of a defined course of study, dedication of hours of reading the material and preparing for the exam. I share this with you because your anxiety is not unique. You are amongst friends here. We all feel it, and we know that these questions are written by the men and women of Wall Street that I've looked up to for decades. I really wanted to do my best, but I didn't let that stand in the way of giving it my all, giving it my best, taking the exam. And I want to encourage all of you that while you are in the course of study for the CMT program, you're also not alone. The anxiety is real. It is a rigorous body of knowledge, and the exams are serious in terms of their test of your knowledge. But you have a network of fellow candidates worldwide who are also in the same boat, and you have a powerful network of CMT charter holders who have been through the process. Now, none of those people will be able to tell you what is on the exam. Exam security is airtight, but they can tell you their experience. They can give you, what worked for them in terms of study habits or how they approached each level of the exam. So I want to encourage all of you to reach out to us. You can find me, send me a direct message on Twitter or LinkedIn. You can send me an email, tyler@cmtassociation.org, if you have any questions or concerns. We also run a discussion forum on Discord. I know that's very millennial of us, but we're trying to meet our candidates wherever they are at. And we invite all of you to join that community as well and share your questions as you're going through the study process. So if you need additional help, those participating prep providers on our website do a lot more in terms of guiding you through the curriculum, preparing practice exams, all the rest of it. We don't endorse any given prep provider, but I have heard from many candidates that it was just helpful for them to have additional guidance as they prepared for the tests. All right, enough about that. Why would any of you devote all of your nights and weekends to studying this program? We've already talked about the deep knowledge that comes from going through a defined course of study, the breadth of concepts that are delivered through the CMT program. But there is a tremendous career benefit to being a CMT charter holder. And there's you in process as a candidate in the program, and then there is you as a CMT charter holder. We do a lot of survey work with our membership. We talk to employers around the world in terms of advocacy for our members, but also to understand what were the outcomes after earning the CMT charter. And there's a great little graphic that our marketers put together in terms of promotions, salary increases, trying to quantify what the career benefits were. But I want to draw your attention to this 65% or so who reported greater assets under management, greater responsibility within their firm. And what that attests to us at the CMT Association is that the credibility and the integrity of the mark, of the Chartered Market Technician designation, is recognized worldwide. It means that they see the CMT charter holder as having a distinct skill set in risk management and alpha capture. There is more trust with that person to manage greater assets in their fund, for clients to trust that advisor, or for firms to deliver more responsibility to CMT charter holders once they have earned the designation. So there are distinct quantifiable benefits to earning the CMT charter, but also you are part of a powerful network. And we know that this industry is crowded and competitive. You want to stand apart from your peers. And so as I talked about the CMT numbers at the beginning of today's session, it is still a niche group, fastly growing, but really differentiates you as a member of your firm, because there are not CMT charter holders on every block slinging resumes around Wall Street. All right. The last point I want to make for any of our CFA charter holders who've joined the session or who are watching the replay we did adopt the CFA Institute's Code and Standards of Professional Ethics. That was in 2015. We have been partnered with them on financial ethics for almost a decade. And the idea is that financial ethics are financial ethics. So CMT, CFA, CAIA charter holders are all bound by the same code of conduct. And that's what you will study from, their case studies, as you answer ethics questions on all 3 levels of the CMT exam. Now, we did a rigorous curriculum matching exercise with what was covered in the CFA Institute's material, as well as what was covered on our level 1. And there was enough overlap in the themes and the topics and the subject matter that it was relevant to give CFA charter holders in good standing an exemption on our level 1 exam. In 2018, CFA Institute put forth a stackable credentials initiative. And so we've seen a tremendous amount of fundamentally sort of brought up investors and research analysts coming into the CMT program to improve their toolkit, to add technicals to their discipline. And there's actually a lot of testimonials on our website. I am not a CFA charter holder, but there are many dual CFA CMTs on there who you can listen to and learn how they employ both disciplines in their investment approach, how it has improved their career over time, and how the 2 disciplines work hand in hand. So you can check those out at CMTAssociation.org right after this session. All right, congratulations, friends. You have made it to the conclusion of today's CMT program information session. For those of you who are not yet enrolled or not yet members of the organization, I would encourage you to reach out to us, admin@CMTAssociation, with any questions you've got, or you can head right to their website to enroll in the CMT program, to register for your level of the exam, and then to begin your process of professional membership and becoming a charter holder. So as I mentioned, the level 1 and 2 exams are held June 1st through the 12th. We still have a great runway, study time for you to prepare and be successful on those exams. And for those of you sitting for level 3 this year, the June 8th is your exam date. And last but not least, I want to encourage all of you not to wait until the last minute, as I did, to register for your exam. Have the confidence, be a part of the network, have some faith in yourself that preparing for this is something you can do, that you can be successful. And registering before April 10th will save you some money. The Prometric test centers our costs and deliverables to them increase after April 10th, and so will the registration fee. So we encourage you to join us, to take part in all that is happening for the CMT Association. And even if this program is something you're considering, but maybe not just yet, there are tremendous amounts of educational offerings at our website and amongst our chapters around the world. So consider becoming an affiliate member of the CMT Association to take advantage of all of that educational content and to start learning a little bit more from folks who don't deliver technical analysis on TikTok. All right, Stan, any closing comments you have for our audience today?
No, I think you did an excellent job, Tyler. I want to thank everyone for being here, and we hope to see you in the program.
Absolutely. Thanks so much for joining us today. We'll see you very soon. Bye-bye.
Thanks, everybody.